F5 delivered a massive beat across the board this quarter. Total revenue came in at $865 million, which is an 11% year-over-year jump, and they absolutely crushed consensus on the bottom line, with adjusted EPS hitting $4.73.
Yeah, that EPS is a really solid 14% jump from last year. And, the market loved it.
Right, the stock popped beautifully after the report, especially since management raised their full-year fiscal 26 revenue guidance to that 9 to 10% range and bumped up the EPS outlook to between 17.21 and 17.33.
Exactly. I mean, it's just a very clean, highly disciplined quarter in a macroeconomic environment that's been pretty choppy for a lot of tech infrastructure players.
Well, and if you dig into how they actually got those numbers, there's this massive structural surprise hiding in the segment performance.
Oh, the hardware numbers.
Right. I mean, product revenue was a huge bright spot, $463 million, so up 19%. But when you split that out, it completely bucks the dominant narrative. We always hear that, software is eating the world, right?
Yeah, the assumption is hardware is dead.
Exactly. But F5's software revenue only grew a modest 7%. Meanwhile, their systems revenue, which is literally their physical hardware, exploded by 32% year over year to hit $240 million. Why is a modern cloud and AI security company seeing a 32% surge in physical metal boxes?
It does sound super counterintuitive at first glance, but you have to look at what the AI boom actually requires under the hood. Management explicitly tied this hardware surge to capacity expansion and higher performance systems.
Okay, so it's a physical bottleneck issue.
Exactly. The AI transition isn't just about writing smarter code, right?
Yeah.
It requires massive physical data pipelines.
I was trying to visualize this when looking at the tables. It feels like everyone is rushing out to buy the absolute latest 8K streaming software for their home theater.
Yeah, good analogy.
But then they suddenly realize their old home router just can't handle the bandwidth. So they have to go out and physically upgrade their fiber optic cables and modems just to make the new software work without lagging.
That hits the nail on the head.
Yeah.
You can have the smartest, most advanced AI software in the world, but if the physical system responsible for delivering that data crashes under the weight of the traffic, the software is useless.
Right.
As enterprises build out these incredibly complex new digital architectures, the physical load balancing and delivery systems at the front door absolutely have to be upgraded.
Yeah.
The old pipes just cannot handle the new volume.
I do have to push back on that a little bit, though, looking at the risk profile here. If this 32% hardware growth is just companies upgrading their old pipes to handle AI, isn't that essentially a temporary bubble?
How do you mean?
Well, once the physical infrastructure is built out, won't those hardware sales just fall right off a cliff next year?
It's a logical concern. But it assumes that AI traffic is like a one-time step up. What F5's leadership is seeing and what they're actually building for is continuous scaling.
Because the models keep getting bigger.
Right. AI isn't a static application. The data sets are growing exponentially. The number of queries is skyrocketing. So the capacity requirement isn't a one-and-done upgrade. It's a fundamental structural shift in baseline enterprise computing. So that 32% growth isn't a temporary spike. It's the new foundation.
Got it. Which perfectly explains why they need that capacity. But, this hardware surge doesn't happen in a vacuum. It brings us directly to the three major secular megatrends that management highlighted on the call as the engines driving this growth.
Yeah, and if we map out those three megatrends, you really start to see exactly why F5 is positioned to win here. The first trend is hybrid multi-cloud adoption.
Right. From what I understand, looking at the commentary, large enterprises are basically refusing to be locked into one single environment right now.
Absolutely refusing.
They want the flexibility to use on-premise servers for sensitive data, coupled with public cloud providers like AWS or Azure, and then layering software as a service on top. But from an IT perspective, that sounds like a logistical nightmare to manage.
Oh, it is a total nightmare. The era of putting all your eggs in one cloud provider's basket is over, mostly because of risk management and cost optimization. But when an enterprise is spread across 3 different clouds and their own private servers, the complexity just multiplies.
Because they don't want 5 different security protocols and 5 different load balancers, right?
Exactly. They want one unified platform that can sit across all of it. And F5 acts as that unifying layer. They replace all those fragmented point products with a single consistent front door, regardless of where the actual data lives.
And that sheer complexity makes the second megatrend even more critical. They point to the AI inference inflection.
Yes, this is huge.
Organizations are aggressively connecting their existing apps and APIs, which are essentially the digital bridges that allow different programs to talk directly to AI models. Now, we hear a lot about AI training in the news.
Sure.
But if AI training is the years of construction required to build a massive highway system, AI inference isn't the highway, right? It's the millions of split-second routing decisions a traffic grid makes during rush hour.
That is a much more accurate way to
Yeah.
look at it, yeah. Training happens in a highly controlled environment over months. Inference happens millions of times a second in real time across the messy public internet.
So, as analysts, how do we see F5 actually monetizing that inference phase? When an enterprise app talks to an AI model, what is F5 actually doing in that split second?
So F5 targets this directly through three specific operational use cases. You've got AI data delivery, AI runtime security, and AI factory load balancing.
Walk me through the mechanics of that. Take AI factory load balancing, for instance. What does that actually look like on the server floor?
Okay, let's visualize an enterprise AI cluster.
Yeah.
You are talking about hundreds of millions of dollars of incredibly dense, highly specialized GPU servers. It's essentially a digital factory.
Right.
If a massive flood of queries comes in and hits just one section of that factory, say server node A, that node is going to overheat, it'll throttle its performance or just crash completely. Meanwhile, server node B is sitting completely idle.
Which is a massive waste of computing power, especially given what those GPUs cost.
Exactly. So F5 sits at the front door of that factory. They inspect the incoming traffic packets and intelligently distribute or load balance those requests across the entire GPU cluster in real time.
Just making sure the factory runs at maximum utilization without melting down.
Yep.
And what about the other two use cases, the data delivery and runtime security?
They follow the exact same logic. For AI data delivery, the model needs constant access to massive data sets scattered across that messy hybrid multi-cloud we just talked about. F5 ensures the networking pipelines deliver that data flawlessly.
And the security aspect.
Well, for AI runtime security, you have to understand that when an AI is actively making inferences, it is highly vulnerable to manipulation or, data poisoning. F5 is essentially securing that live millisecond to millisecond interaction.
So they are basically the high-end plumbing and security force for the most expensive technology investment a company has ever made.
That's a good way to frame it.
Which brings us to the third megatrend, and honestly, the most alarming part of this earnings report when you read the management commentary: threat landscape expansion.
Yeah, this part is intense.
They lay out very clearly that cyber attacks are becoming increasingly AI-driven and agentic-powered.
It completely upends traditional cybersecurity paradigms. Management noted something in the report that should keep, frankly, every IT director awake at night. They said AI has compressed the time between vulnerability discovery and exploitation.
Let's break down the mechanics of that compression for the listener, because in the past, someone would discover a vulnerability in a piece of software, right? And they might post about it on a dark web forum.
Right, there was a whole human process.
Exactly. A human hacker would have to read about it, figure out how to exploit it, manually write the malicious code, and then launch the attack. That entire process gave companies a window of time, sometimes days or weeks, to patch their systems.
That window is entirely gone now.
Wow.
With AI-driven attacks, the moment a vulnerability is discovered, an autonomous AI agent can instantly generate the zero-day exploit code and launch a coordinated attack across millions of global targets in literal seconds.
So it's essentially machine-on-machine combat now. Human reaction time is entirely obsolete in this equation.
Completely obsolete.
So if the bad guys are using AI to attack in milliseconds, how is F5 possibly defending against that? Especially considering, 71% of their product bookings come from enterprise customers, banks, hospitals, governments.
Yeah, institutions that absolutely cannot afford to go offline.
Right.
So F5's response is a pivot to what they call a continuous defense model. Because the threat is continuous, automated, and AI-driven, the defense has to mirror that. They are utilizing advanced and preview frontier AI models internally to proactively hunt for vulnerabilities within their own code. They're basically deploying cutting-edge AI to hack themselves, discover the flaws, and write the fixes before the malicious actors even know the vulnerability exists.
Fighting fire with an even faster, smarter fire.
Precisely. And this has forced a massive operational shift for them. They are no longer waiting to bundle security updates into quarterly or annual releases. They've instituted a new, monthly release cadence for hardened software.
Okay, stop right there. Because if I am an enterprise IT manager overseeing a massive network, updating mission-critical software across thousands of servers every 30 days sounds like a logistical nightmare.
It sounds impossible, yeah.
Every time you push an update, you risk breaking something.
Yeah.
Updating the front door of your network monthly seems like a guaranteed way to accidentally take your own company offline.
You are absolutely right. In a legacy environment, monthly patching at that scale is basically impossible. And that is exactly why F5 is heavily leaning into their fleet management capabilities via a platform called F5 Insight.
Okay, how does F5 Insight actually solve the patching problem?
It gives the customer a unified bird's-eye view of their entire big IP estate. And by that, I mean the massive global fleet of physical and virtual F5 systems a company is running.
Right.
So Insight tracks every software version, evaluates the security posture of each node, and assesses update readiness. Instead of a human manually pushing updates and just praying nothing breaks, Insight provides automated, guided workflows to execute the patching process seamlessly.
So it takes the human error out of it.
Exactly.
Yeah.
It's no longer a luxury to update systems once a year during scheduled downtime. Survival in an agentic-powered world requires constant automated patching.
It's like F5 isn't just selling you the lock for your front door. They're selling you an automated security system that analyzes the neighborhood burglars and just changes the locks every single month on its own without you having to call a locksmith.
And as the financials show, major enterprises are more than willing to pay a premium for that automated peace of mind.
Well, speaking of paying a premium, let's pivot to how all this incredible tech translates into actual cash returns for investors. Because a company can have the best AI defense in the world, but if they aren't running a disciplined, profitable business, the market will not care.
Very true.
And the margins we are seeing here are just wild. Let's look at the Q3 tables. Their non-GAAP gross margin is sitting at an incredibly high 84.2%.
It's staggering.
Think about the mechanics of that. For every single dollar of revenue they bring in, they keep over 84 cents after factoring in the direct costs of delivering their products. And their non-GAAP operating margin is a very healthy 35%.
To put that 84% gross margin in perspective, those are elite, purely software-level margins. But remember what we discussed earlier. They just saw a 32% growth in physical hardware systems.
Right, and hardware traditionally carries much lower margins than software.
Exactly. The fact that they can sell physical metal boxes and still maintain an 84% overall gross margin points to massive pricing power.
So they're not discounting to move boxes.
Not at all. It means the proprietary software and security capabilities baked into those physical systems are so highly valued by customers that F5 can charge a massive premium.
And that premium pricing throws off an unbelievable amount of cash. Free cash flow for Q3 alone was $316 million. But they aren't just hoarding this cash in a corporate treasury. They are aggressively returning it to shareholders.
The buybacks are huge here.
Yeah, they executed $100 million in share repurchases in Q3 alone. In fact, year-to-date, in fiscal year 26, they've used 64% of their $778 million in free cash flow to buy back their own stock.
Which easily blows past their stated commitment to use at least 50%, right?
Yeah, way past it.
When management uses that much cash to shrink the outstanding share count, it is a massive signal of internal confidence. They're looking at their own balance sheet, looking at the AI megatrends, and deciding that investing in their own shares is the highest yield move they can make right now.
I do want to test that confidence a bit, though, looking at the geographic breakdown, because the growth wasn't perfectly uniform across the globe.
Oh, it was a bit mixed.
The Americas grew a solid 11% year over year. EMEA, which is Europe, the Middle East, and Africa, saw an enormous 27% growth. But APAC, the Asia-Pacific region, actually contracted by 11%.
Yeah, that's the one blemish.
So with operations this profitable overall, I have to ask, is that 11% contraction in APAC just a temporary regional headwind? Or does it highlight how much that massive 27% growth in Europe is artificially propping up the international numbers right now?
It's a very sharp observation. While the earnings materials don't provide a country-by-country autopsy of the APAC contraction, you really have to contextualize it within what is driving that huge explosion in EMEA. The CEO explicitly tied the EMEA growth to converting hybrid multi-cloud adoption into digital sovereignty wins.
Digital sovereignty, that is a massive geopolitical talking point in Europe right now. Explain the mechanics of how that benefits F5.
Think about a major European bank or like a government healthcare agency. They want to utilize the incredible power of advanced AI models, but they are terrified and often legally prohibited from sending their citizens sensitive data to a massive public cloud operated by an American tech giant.
Right, data privacy laws there are incredibly strict.
Exactly. They require digital sovereignty. They need the data to stay within their own national borders on their own physical servers,
Sure.
but they still need to connect those local servers to various localized cloud services to run the AI.
So they're forced into a highly complex, highly localized hybrid cloud environment.
Yes. And who acts as the unifier for complex hybrid environments?
Right.
Right. Their platform allows these European institutions to build sovereign, highly secure, localized networks without sacrificing the performance needed for AI. So while the APAC contraction is definitely a metric to watch in coming quarters, the structural tailwinds in EMEA, driven by digital sovereignty, are incredibly durable.
And the net result globally is so strong that management clearly isn't showing any hesitation. Because of all this momentum, F5 actually raised their fiscal year 26 revenue growth outlook. And you just don't raise full year guidance by that magnitude if you are deeply worried that one regional contraction is going to derail the company.
No, you don't. The overall picture here is of a company operating with extreme financial discipline, successfully riding three massive overlapping technological waves, and converting that position into highly profitable cash-generating growth.
Let's pull all of this together. We're looking at F5 posting 11% total revenue growth, driven by an absolutely astounding 32% growth in hardware systems. And we now know why. The physical foundation of the internet absolutely must be reinforced to handle the sheer weight of AI inference.
Absolutely.
They're operating with incredible 84% gross margins, deploying cutting-edge AI to hack their own systems for continuous defense, generating hundreds of millions in free cash flow, and raising their financial guidance.
It is a phenomenal example of a legacy tech company capitalizing on a paradigm shift.
It really is. And it serves as a great reminder of why this deeply technical infrastructure matters to all of us as retail investors. Every single time you log into your banking app, stream a 4K movie, or query an enterprise AI tool, the speed, the availability, and most importantly, the security of that interaction is highly likely being orchestrated by F5 sitting at the front door. This Q3 report is undeniable proof that the physical plumbing of the AI boom is an incredibly lucrative place to be.
Oh.
Make sure you hit follow on the show for our daily earnings coverage because we're unpacking reports like this every single day.
And before we wrap up, I want to leave you with one final thought to ponder, really based on what we've uncovered about this new threat landscape.
Sure.
We discussed how attacks are increasingly agentic powered, right?
Yep.
AI bots are doing the hacking. Meanwhile, F5 is deploying AI models to do the defending, and massive AI clusters are doing all the back-end data processing.
Right. Human interaction is basically being engineered out of the loop.
Precisely. We are fast approaching a threshold where the vast majority of all internet traffic will be entirely non-human. If F5 truly sits at the front door of every app, how long until those applications no longer need human interfaces at all? We might literally be watching F5 transition from guarding the door for human users to orchestrating, load balancing, and securing a purely machine-to-machine global ecosystem.
The invisible internet is about to become entirely non-human, and F5 will simply be checking the machine's IDs at the door. That is a truly wild thought to leave on. Thanks for taking this deep dive with us.